What's up, everybody? Just wanted to hop on and make a quick video for you guys explaining how to identify and draw supply and demand zones. So when it comes to identifying supply and demand zones, in a general sense, what we're looking for is a basing candle, which is then followed by a rally or imbalance candle. So here's an example of demand, and here's an example of supply. So what these zones are essentially illustrating or representing to us through the candlesticks is a shift in power. So during the basing period, the supply and demand or buying and selling equation is equal. The market is in equilibrium for the most part. And then during that preceding candle, the rally or imbalance candle, the market shifts from being balanced to imbalanced, where for demand, buyers take control, and for supply, sellers take control. So it's this area of origination or origin that buyers took control or started to dominate the market that we can look for pullbacks into to see if they defend upon revisit. Same thing for supply. Sellers dominate this region in the market, and we can look for pullbacks or to short pops when price comes back into this area. So that's a brief overview of identifying these zones. When it comes to actually drawing them though, what you guys need to do is for demand, the conventional method is to get a rectangle and make it green. That's what I do, so that's what you guys will be seeing here. Go ahead and get a green rectangle and draw the top of it at the open of the red basing candle, and then draw the bottom of it at the bottom of that red basing candle. So this is going to constitute your demand structure within the market, and we can look for pullbacks into this region to potentially hold, to take the market long. To draw a supply zone, what you guys want to do is get a red rectangle and draw the bottom of that zone from the open of the green basing candle, and then drag the top of that red rectangle to. So here's a good example. Normally zones form like this, where the basing candle is the highest point. However, for this rally candle, we can see that the high of it protrudes past the high of this basing candle. So for this example, you guys would drag the top of the red rectangle to the top of the rally candle or the imbalance candle. So that's how to identify and draw these zones, and we'll be going over a few different examples across different time frames. So this works on any time frame. Supply and demand is how the market moves, and these zones are being formed every day and really every couple of seconds. So here's a good supply zone in the market, and this supply zone is an excellent example of the type of zones you guys should be drawing. So I'm not going to say that, and I'm not going to advise you guys to do anything. This is all based off of my personal experiences over years of being in the market. This is an excellent looking supply creation, as the drop is very strong. What you guys will stumble across is zones that do not look very strong at all. Those are best to stay away from, and this is going to be mainly forged and derived from your own experiences and really your interpretation of the market. So I can't sit here and really put a label on what's strong and what's not, but just take that one thing away from this video lesson is not only how to draw and identify them, but that the zones should be strong. So here you guys can see after that strong supply creation, that price came into this zone and rejected 3 times, providing some good opportunities to fade the market back to the downside. So we can go down to the 15-minute. So another point I should bring up to you guys is that when it comes to entering at these zones, it's within our best interest as traders to really not just entering blindly when price gets to these zones. We should be using tools, whether it be order flow, which is what I use, or candlestick confirmations with volume to confirm or validate an entry upon revisit of these zones. So for example, here we have a 15-minute demand zone that formed intraday in the S&P 500, and the market moves up, the demand zone gets created, and let's say that you're interested in a pullback into this zone. And if we're using order flow, a good example of what you guys might want to see is trapped participants. So let's say that there's a bunch of aggressive market sellers that are hitting the bid inside of this zone. If all of those sellers are transacting inside of the zone and really putting pressure on the bid to try and move price down, in theory, price should move beneath this level, but if price moves up responsively and quickly, it's an indication that a bid is stepping in and therefore would actually validate a entry from that zone. So there are multiple ways. There's really no absolute way to confirm your entries, but order flow and watching the relationship between buying and selling on the tape is a very strong and popular way to do that. That's what I do. I'll be coming out with more videos on that here in the near future, so be sure to tune in if you guys want to look into that content. So if you guys scalp, if you are interested in micro imbalances within the market, you can even identify these zones on a smaller time frame. So right here we have a valid 1 minute demand zone in the market. And so here's a good example actually of the fact that these zones don't work all the time. So I'm not going to sit here and lie to you guys and just show you a bunch of excellent examples of these zones working out. It's not practical. That's not how the markets work. No strategy works 100% of the time. You guys could mark this, and here provided an excellent opportunity to take the market long if you got confirmation, where you could have rode a, I don't know, 10, 15 point move to the upside, but then price broke below this zone upon revisit. And so that's a pretty good example of showing you guys that these zones don't work all the time, and it's not practical to expect that. But that's going to do it for this video. The main thing that you guys should be taking away from this, on top of drawing and being able to identify these zones, is identify these strong ones and then try to focus and create a system for which you can employ into your trading, where you are you're not just entering when price gets to your supply and demand zones, but actually looking for confirmation. So be sure to leave a like on this video if you guys found it useful. I'll be posting more content here very soon, so be sure to stick around.